Warm welcome to all of you. This is A.K. Asnani from Smart VRC, and the topic is very interesting. Foundation of a bull run is laid. What next? So, almost exactly a year ago, on 23rd of March, the Sensex was very close to 26,000 points. As you can see at the bottom, you can see the start is about 26,000, and now the index is at about 51,000, almost 100% up, almost 100%. And as you can see from the chart, investors are finding it very difficult to go beyond 50,000. And a couple of times it tried to overtake 50,000 points mark BSE Sensex, but it was unable to do so. And then finally it succeeded. It went past 52,000 also, but again and again it is moving little bit up and little bit down of 50,000. Why this 50,000? This is a psychological barrier. And of course, market is jittery. Market is unable to decide what to do next. Why? Why it is like this? If the results are so good for the last couple of quarters, why market is not able to move up, go beyond, way beyond 50,000? That is what we are going to discuss today. Not only that, because we don't believe in predicting the market, but of course, what market is thinking ahead, or why the investors are not willing to invest more. There are reasons for that. When I say investors, means the big investors. So here we go for a poll. I hope you are able to see on your screen. What is your state of emotions at this juncture? What do you think? Are you feeling fearful, or is it normal for you, or are you very optimistic of the future? So you have to select only one option. Only 62% of the participants have voted. I request all of you to participate, and let's see how you think and how the other participants think, majority thinks, and what we are going to tell you. In another 5 seconds, we shall close this polling. So 48% of investors, of the participants here, think that they are feeling very optimistic, and 34% it's normal, and 18% are feeling fearful. All right. So it's a mixed bag, but most of the investors are optimistic. That is a very good result, I can say. You should always be optimistic. You should always be thinking growth oriented, especially at this juncture, because many things, new things to come. So we were talking about the BSE Sensex on 23rd March 2020, almost an year ago. Index was 25,981. That is a BSE sensitive index. And 12th of March 2021, Sensex was 50,792. That is up by 95%. That is a substantial jump. Portfolios in general should have doubled. If you have not doubled your money, total money, then you need a very serious thought on the reorganization of your portfolio, because it is not only the big stocks, big companies, even the mid caps and small caps, they have participated much better way, and they have gained much more than the larger companies. So there should not be any reason that why your portfolio has not gained by at least 100%. If there are reasons, then you need to look very seriously why it has happened like this. where which stocks have dragged your returns. Now coming to the third quarter results, listed non-finance companies have reported 56% increase in net profit. 56%, and I'm not talking about quarter on quarter. I'm talking about year on year. That means for the same period last year, if we compare, the net profit is up by 56%. By any means, there's a very big jump. Even on quarter basis also, it is 31%. And this is the data provided by CMIE, Center for Monitoring of Indian Economy. And how come suddenly 56% increase in net profit? And of course, on a very nominal sales growth of below 10%. Why there is sudden jump? And also the net profit margin, if you see from the chart, for the last 3 quarters, how it has moved from 4.5% to 8.1% in Q2 and 9% in Q3. So literally speaking, compared to Q1, the Q3 net profit margin is doubled. So what is the reason why the net profit margin is so high and why the net profit has increased by 56%? What are the reasons? First is the pent-up demand. Of course, in Q1 and Q2, it was a pent-up demand, and in Q3, it was partly a pent-up demand and partly a real growth. Renegotiated rentals. So many companies found it very difficult to pay the rents. So they have renegotiated with the owners, and that way their expenses have reduced. Another one is very low travel expenses in Q1 and Q2, and of course, partly in Q3 also, the companies gained on account of very limited travel expenses because of the work from home culture. There were not many salary cuts, bonus were capped, incentives were reduced. And continuing with the reasons for spurt in profit, reduction in marketing expenses. This was also one of the reasons. Staff cut by letting go a lot of employees. Yes, we all know a lot of people have lost their jobs. Increased technology and digital implementation. And that is the reason why our IT companies are seeing a lot of new big contracts in terms of digital transformation. Growth in agriculture pushed up rural demand. From last 2 years, monsoons have been pretty normal, and that has given a good push to the agricultural sector, and that has resulted into a good rural demand. Some of the companies have reduced their debt. That led to lower interest costs, but yes, because they were getting prepared for very tough times ahead. So these were the reasons for the spurt of 56% increase in net profit. Now, there are some positives as well as some negatives at this juncture, so that I have highlighted as kuch khatta and kuch meetha. Let's see. IIP contracts to 1.61% in January 2021. Yesterday only the data has been released, and index for industrial production contracts to 1.6% growth. Retailization has jumped to 5.03% in February 2021. Now, this is really very troublesome for those who are living on the interest earned by fixed deposit. In fixed deposit, we are getting 5.5%. That too, if we go for more than 3 years or 5 years of fixed deposit, then only we are able to get 5.5%. And if the inflation itself is 5.03%, and also you include the tax, then in fact we are getting negative real returns from banks, bank FD. As per the initial estimates, we are going to have a normal monsoon, 3rd year in a row. This is a good and this is a big positive for the whole economy. Petroleum product consumption fell 4.9% in February as demand for both petrol and diesel fell. So this is not a good news. Of course, rise in diesel prices will hurt the transportation costs. OPEC, we all know OPEC stands for Organization of the Petroleum Exporting Countries, have decided to hold the production steady and in fact cut some supplies. So in the near term, there is hardly any chance of fall in crude prices. Shortage of semiconductor, yes, that is impacting especially the automobile sector. Why this shortage of semiconductor? Because during the lockdown, we all were using, all family members were using a lot of laptops, desktops, mobiles, iPads, and all those electronic goods which all consume semiconductor. And suddenly we are facing the shortage of semiconductor. This may take some time because there are limited producers of this semiconductor and all are running at full capacity. Export of iron ore and steel to China has jumped 81% and 398% respectively for the first 10 months of the current year. And this figure is on year basis. This is something very big jump. And that is the reason why we are witnessing the rise in steel products. Not only steel, rather all the metals and commodities. So, and as we have seen, the steel producing companies have reported excellent results for the third quarter. Even for the fourth quarter, we are expecting very good results. But be very careful. It is very, very difficult to predict the peak, or even near to the peak also cannot be predicted. It is a very difficult sector, commodity sector. Passenger vehicles and commercial vehicles are expected to log 25% and 35% growth next year. So what do you think? Is this a good number? And recently data has been released for the 14th of March and surge in COVID infections to 25,154. This is for India, and there's a big jump, almost more than 100% during last a week or 10 days. So coming to the poll 2, and that is what I was asking you, where passenger vehicles and commercial vehicles to grow 25% and 35% growth next year. How do you rate this? What do you think of this? Is this growth rate excellent or good or normal or not good? Let's see. Now it is in front of your screen. You can vote for it. I request all of you to participate. This is really going to be a very eye-opener, and this is going to be a very good analysis. 75% of the participants have voted. Still 25% are there. I request all of you to please participate. So we are closing this polling. 81% have participated, and the results are whether I will say you yourself have to see what people have to say. So 59% say that it is excellent. 37% say that it is good. 1%, only one participant has said it is normal, and only 3 participants said not good. So let me give you a perspective, then you may change your decision. You may. For the current year, for the first quarter, there was almost no production in the automobile sector. So we lost 25%. Okay. If I am saying that next year there will be a growth of 25% on year basis, that means literally there will be a degrowth. yes, there will be a degrowth. If we are expecting, if there is a, for first quarter, there was no output and we are expecting 25% growth. So actually, there is no growth if we compare the last 9 months. And same is the case with commercial vehicles. Commercial vehicles are still not growing that fast as compared to the passenger vehicles. That is why the growth expected is more for the next year. And also the government is expanding, government is spending a lot of money on infrastructure development and other activities, and that will definitely see a growth in commercial vehicles. Now let's see what the industry stalwarts have to say. India is on the cusp of a multi-decade capex cycle. This is a very big statement. And a multi-decade low debt equity ratio for corporate India will allow banks another opportunity to fund brownfield and greenfield projects. Okay. Earlier, credit product approval took weeks and months. Now, an existing customer can get a personal loan in 5 minutes. Instant EMIs are available for shoppers both online and offline. That is the power of technology so well harvested by the BFSI segment. For the country of India's size, the number of credit card issued is very small. No one talks about it today because UPI transactions are more than even debit card transactions. So leave apart the credit card transactions, even the UPI transactions are more than the debit card transactions. Low interest rates and price affordability is driving a big housing boom. So all these four these are indicating a very positive for the economy, positive environment for the economy, and this has been said by Kalpana Moparia. She is the former chairman JP Morgan South and Southeast Asia. This is a statement from International Energy Agency, that is IEA. India is set to experience the largest increase in energy demand of any country worldwide over the next 20 years as its economy continues to develop. Very, very long horizon, 20 years for the next 20 years. The Atmanirbhar program is a great move to drive the manufacturing contribution to GDP to 25% by 2025. It is coming at an opportune time with most global companies evaluating their future capex plans with the developing situation between the US and China. This would provide a strong impetus to exports from India, besides FDI and job opportunities already seen in the EMS, that is Electronic Manufacturing Services sector. We expect FY 2022 to be a robust year, that is the next year. With strong corporate rebound and growth coming back, certain sectors such as real estate, infrastructure, and automobile are seeing good activity since opening up. This is a statement by Mr. K. Balasubramanian. He is the head of corporate banking group, Citibank India. Another positive statement, but also an indication regarding the pressure on profits. This is from Mr. Vimal Kejriwal. He is the MD and CEO of KEC International. He says the revenue volumes are looking up in the next March quarter and maybe up 8 to 9% year on year. But with raw material prices going up for the steel and other base metals, margins are seen flat for the quarter. So there is a hint that the companies who are consuming steel and other metals are facing a pressure on their profit margins. As far as the order intake is concerned, it is reasonably good at 9,600 crores. This is a statement from FICCI, and based on the survey from 190 companies from different sectors, it says that the business confidence index improved to 74.2 in the third quarter of the current financial year, the highest in a decade. This is a very strong statement and very, very sound and very optimistic thoughts of the industry leaders. This is another transmission tower company, Kalturu Power Transmission, and the statement by Mr. Manish Mohnot, Managing Director and CEO. These new order wins help us to strengthen our power transmission order book in India and overseas market. Our current year order inflow has reached around 8,000 crores, and additionally, we have good visibility across all our businesses. Our order book visibility with low debt gives us confidence of growth from long-term perspective. Low debt, as we have been discussing, one of the reasons for expectation of good growth in times to come is our corporate sector has low debt equity ratio. Now, this is a statement from Mr. Kamal Bhadada, and he is the Business Group Head, Communication, Media and Information Services, TCS, Tata Consultancy Services. We are extremely bullish for the next 2-3 years as telecom transition from being just network providers to digital services. Those who are unable to ramp up will merely be relegated to being a network infrastructure company. Our growth is backed on these areas as we help them transition through this transformation. Such a powerful statement, and none other than a TCS, a Tata Group company, that speaks volumes about the confidence in the future. We all have to see how the economy reacts to liquidity coming down. But what I see, authentic demand across sectors, which is very cheering. Mr. Kumar Mangalam Birla, Chairman, Aditya Birla Group. Now, this is a statement from Mr. Sanjeev Goenka, Chairman, RP Sanjeev Goenka Group. There are different views on whether it's a V-shaped or W-shaped recovery, but clearly we are recovering. India is clearly poised to grow. And this is a very powerful statement from Mr. Vinod Khosla, founder Khosla Ventures. 10 years from now, the lasting influence will be the rate of innovation. We will see a dramatic change from this point onwards. There is a fundamental set of assumptions that have changed completely. The cycle is clearly turning. So any projects added today at current valuations are likely to be quite lucrative as they get developed over the next 4 to 5 years. So certainly we are looking to rapidly add projects to our portfolio. This is a very big statement, and soon I will show you who has made this statement. Actually, the fourth quarter overall, I expect a very good operating quarter. We have around 12 new launches planned during the fourth quarter, which will be our highest ever new launch number. We are still waiting for regulatory approvals from some of them. I do expect that this would be a quarter for bookings. And this statement from Executive Director and Chairman of Godrej Properties, Mr. Piroj Shah Godrej. That is the confidence they are looking for 4 years, for 5 years. We are very hungry for growth. We have proven that we are signing more rooms and opening more rooms on our fee-based business than any other brand today on the Indian subcontinent. We are going for exponential growth in different brands. You will see a lot of growth coming in big properties with Ginger. We will move from 50 to 70 rooms to 300 to 400 room hotels in big city. And this is a statement from Mr. Puneet Chatwal, and he is the CEO of Tata Group's hospitality chain, the Indian Hotels. Housing Development Finance Corporation. Demand for home loans continue to remain strong owing to low interest rates, softer property prices, concessional stamp duty rates in certain states, and continued fiscal incentives on home loans. And from our RBI governor, while the year 2020 tested our capabilities and endurance, 2021 is setting the stage for a new economic era in the course of our history. So far, we have seen the big statements from the stalwarts of the industry, from CEOs of Tata Group companies, from Godrej, who are very conservative in giving the statements. So one can very well expect or very well feel what they think of in times to come. So we are taking a very small break of about 3 minutes. I want to show you the activities of Smart VRC. So this was all about Smart VRC. Coming back to our presentation, the growth enablers. What are the growth enablers? So we go back to 2016. So there was a demonetization of high denomination notes, and then there was also an IBC, insolvency and bankruptcy code. In 2017, there was introduction of goods and services tax, GST, and as we all know from last couple of months, it is going beyond 1 lakh crores. Our government is able to collect more than 1 lakh crores from GST. And also there was a RERA, that is the Real Estate Regulatory Authority. In 2019, there was a sharp cut in corporate tax, but unfortunately in the next year, 2020, there was a COVID and the companies were not able to truly get benefited from the tax rate cut. And then last year, in 2020, we had a farmers law and labor law. And in 2021, government has already declared PLI, that is the production linked incentive, and corporate sector is expecting a lot of benefits from this PLI, and the same is from the government's perspective also. And then government has also set the ball rolling for privatization. There is going to be a surge in government expenditure because of the expansion in the fiscal deficit. And whenever these developed economies come out of this COVID impact, we are going to see China plus one policy very soon. And this will have a positive impact on our corporate sector. So how these are the growth enablers? As you can see, the digitization or the formalization of economy, what is happening is the number of UPI transactions from 2016-17 to 2019-20. Every year it is growing by leaps and bounds from 1.79 crore transactions to 91 crore transactions to 535 crore transactions to 1251 crore transactions. There is a very big leap. So our country, our economy is going digital. Now, these are the GDP projections made by the OECD, and India is expected for the next year, and India is expected to log the highest GDP growth of 12.6%, followed by China at way behind at 7.8%, then USA 6.5%, Turkey and all the other countries, France, Great Britain, Japan, as you can see. So it is very high time to reorganize our portfolio. And as we have discussed, the net profit margin spurt was definitely there. Big spurt was there for Q2, Q3, but same may not be available in the coming quarters. So we should be very careful. We should not simply expand our expectations that the performance for the last quarter will continue in the coming quarters. Definitely, it is not going to happen, but sales is definitely going to improve, and that may lead to improvement in profits. So it is going to be a very tricky to maintain the portfolio, in which companies we are going to see a squeeze in margin, in which companies we are going to see a spurt in sales. I cannot say big spurt, but definitely good growth in sales. And be very careful. Whatever returns you have made from last 1 year may not continue. It may become very difficult to outperform the stock indices. Yes. So you have to keep more focus towards the established companies. Time has not come for very small companies to report exceptionally high growth in sales and profits, right? Because we are just at the inflection point. Still, that economy has to grow. Only the foundation has been made. Avoid high exposure to dark horses. You will see a lot of stories going around in the social media and television that such and such company is going to report a total turnaround in operations. Yes, many companies have reported turnaround, but you look around for last 10 years, how many companies have permanently turned around? How many companies have been able to create products which are magical in nature? So don't go by the stories. Look for the authenticity of those stories. Let the performance first come, then invest. Yes, you may lose a part of the gains, but still there will be a low risk. Some mid-sized pharma and specialty companies hold tremendous potential. As I have been saying that in the next 3 months, 6 months, or maybe 9 months, the developed countries will be almost out of this COVID impact. And then at that stage, I expect that many of the big companies may go for big contracts with the Indian pharma and specialty chemicals in view of China plus one policy. Be very careful with metals, minerals, and commodity companies. They are reporting very good results, but those good results may not last long, and be very careful. It is said that when the P ratio of such companies is the lowest, that means it is the peak. It is set like that. So, and it takes many, many years for those cycles to come back. So be very careful with such companies, and I would recommend you to keep the weightage not beyond 10% in your portfolio for such stocks. Coming to the smart word, it is not the strength that determines the survival of the species or even intelligence, but ability to adapt to change. World is changing, India is changing. So you have to keep changing because only change is the constant. So you have to be very vigilant what is happening around, and you have to be very particular about the story of the company you are investing. Ultimately, it is your company's profits, it is your company's earnings which will decide the share price in the long term. The depth of one's understanding of a business, the height of one's value system of the stock, and the width of one's tolerance to the stock volatility determines the size of the wealth one can create from stock market. Yes, path is not going to be an easy path, is not going to be a straight one. As usual, always it happens. It moves ups. There will be many ups and downs, but definitely at this juncture, I can say that given under the given conditions, India is rightly placed to lock a very good growth in times to come. With this, we have come to the end of this presentation. Soon we will open the question and answer forum, and you can write in your chat box or you can raise your hand and I will ask you to unmute. Thank you very much for sparing your valuable time. Okay. Any views on PSU company? As a matter of fact, we hardly recommend any PSU stocks because the reason is very simple. It is very difficult for a public sector company, for a government company to compete with a private counterpart. There are exceptions, but very rare. So in general, we don't recommend any PSU stock. Of course, there is a lot of good run-up. In fact, because the reason is because of the government wants to privatize, but still that has not been finalized. Which companies will be privatized and how they will be valued, it all depends who is going to acquire and how they are going to value it. So, what is China One policy? Okay, during the time of pandemic, many of the big corporates in US and other developed countries, they faced trouble in procuring the items, in procuring the material from the China. And since they have a contract with only a single company, so their operations were interrupted. Now, these big corporates, they want one more supplier, and that is how China plus one. They want a supplier outside of China, and that is how China plus one. Mr. Jeet, kindly unmute yourself. Yeah.
Yeah, a very good morning, sir. A very good session as usual.
Thank you.
So my question is regarding BSE, as I think it is a value stock at the moment, and BSE being such an old stock exchange is not able to capture market share from NSE. Why is that?
See, it all depends how you produce the infrastructure, how much it can support, how much volumes it can support, what are the policies and all those things. And that is the reason why for almost all the stocks, volumes on NSE are way ahead of BSE. And NSE is the latest stock exchange, and it is run by professionals. And BSE, as we all know, in the older times, it was not professionally run. It was run by not very professional people, I can say like that. And that's the reason.
Okay, thank you, sir.
Okay. Mr. Raju?
Hey, good morning, Asnani sir. Can you hear me?
Yeah, I am able to hear you. Good morning.
Thank you very much for your valuable information and lessons to the investing community, sir. I attended your workshop in Hyderabad 4 years back when you came
Yes,
over
yes.
here. Ever since I've been following.
Yeah.
Thank you all for your advice. My question is regarding now in the last 2-3 quarters in pharma or IT companies have been at least declared some good results. Now this quarter being the annual, can we take short-term trading or some gain when they declare results in this quarterly results for the yearly basis? Is there any investing opportunity?
Yeah, there are investing opportunities, and from many years of advice and investing, I have observed that suppose for the first 3 quarters, if company is able to report a net profit growth of 25%, and in the fourth quarter also the company reports a growth of 25%, then the weightage for the full year results is always higher than the results for the quarterly results. So you can always take advantage of that. And from last couple of months, rather I can say from last 2 months, pharma companies have come down, and this gives a good opportunity to invest in select pharma companies. I do agree with you.
Thank you, sir.
Yeah. Mr. Prashant?
Yeah, Asnani sir, good morning. So my question was regarding the passenger vehicle and the commercial vehicles in terms of sales growth. I think you mentioned 25 and 35%.
Yes.
So I think the conclusion was not very clear. Is it good to what you call invest in passenger vehicle as well as commercial vehicle stocks, considering the percent of growth what you mentioned, or it's better to avoid? I think it was not very clear, the conclusion of the discussion.
Okay. It is like this. For the first quarter, just I'm giving you a just assume, okay, I'm not going for real numbers. For the first quarter of current year, the growth was 0. The output was 0. For the second quarter, suppose it is 25, third quarter 25, fourth quarter 25. So for the full year, it is 75. Had it been a normal year, I mean to say if there is no COVID, then for the first quarter also, we should have 25. So the overall it is 100. But due to the COVID, there was a total disruption, and for the first quarter, there was no output. So we are sitting at 75. For the next year, if I say there is a 25% growth, so 75 plus 25, it is around 96, 97. So still we are not near to the full year results, full year capacity. So basically there is no growth. We are, whatever the projections are there, if suppose somebody tells that there is going to be 25% growth, so if you go for the total numbers, there may be a growth, but if you compare to the previous year, that is 18-19, then there is no growth. And there are reasons for that. If you have seen the data for the registration of the vehicles, it is showing a decline. It is showing a decline for the month of January and also for February. So, and also the crude prices are moving up, and they are way ahead, way up, means it is around $68 per barrel. There is a decline, and there was a pent-up demand, and all those things if we consider, then that is the reason why the industry leaders are not projecting very high growth rate for next year. That is how I'm projecting the growth rate.
So in short, what's your advice on automobile stocks? Better to avoid based on?
No, I don't. Most of the automobile stocks are already almost fully discounted. Moreover, even if there is a growth of say 30%, or maybe if there is a growth of 40% also, companies will not be able to deliver that kind of net profit margins which they have delivered during last 2-3 quarters, because steel prices are up, plastic prices are up, everything is up. So the benefit which these companies enjoyed will not be available in the coming quarters. So maybe in auto ancillaries, I find some scope, some value, but in auto OEMs, there is very less scope. There are only hardly 1 or 2 companies wherein one can make the investment.
Okay, I think that answers my question. Thank you very much, sir.
Thank you.
Very informative and educative. Thank you.
Yeah. Welcome. So with this, we have come to the end. I thank you once again. And also, I would like to inform you that SBP, Smart Billionaire Picks, is very near to 1 CR. And maybe any day we may touch 1 CR. And there is going to be a great day for all of us. And there are subscribers in this webinar who have been invested since day 1. That is 30th of May 2001. There are those investors here with us, and we are going to take a small interview from them in times to come, and we will show you what they think of, what they learned, and what we learned from them. Yes, we also learned from them. So there is no more queries. Thank you very much. Thank you. Bye-bye.